Hi, Scott. Yeah, you've just muted, which is great, but I assume that you can hear me okay?
I muted him.
Okay, all right, thank you. So Scott, if you could just unmute and just verify that you can hear me.
I can hear you.
Perfect, thank you. It's an audio test of council chambers.
Hi, everyone. We're just going to wait for Councillor Turner. Unfortunately, Vice Chair Higgs is not able to join us. Once Councillor Turner is here, we'll get the meeting underway. Thanks for your patience. Okay, thanks very much for your patience. I'm going to call the meeting to order. This is the third meeting of the Audit Committee, and I wanted to say that the City of London is committed to making every effort to provide alternate formats and communication supports for council, standing or advisory committee meetings and information upon request. To make a request for any city service, please contact accessibility@london.ca or 519-661-2489, extension 2425. I will look to committee members to see if there are any disclosures of pecuniary interest. And I can't necessarily see everybody, so raise your hand on the Zoom if you want to get my attention. Okay, I don't see any. There are no consent items. There's no schedule items, which brings us to items for direction. I'm going to start with the 2019 financial audit. I think I'll turn it over to the auditors to present the report.
Thank you very much. Can everyone hear me?
We can, Ms. Denbach, go ahead.
Okay, thank you. I have with me Deanna Baldwin, who is the Audit Senior Manager, and we would just like to walk the committee through the highlights of our audit findings report for the year. The document has been provided to you, and I'm going to start on page 1 of our document, which is the executive summary. So first of all, thanks for having us today in this virtual format. Please feel free to ask questions as we go through our report. And just a couple of items in the executive summary that I would like to highlight for the committee. So as of the date that this report was prepared, which was August 28th, we had completed our audit with the exception of a few items that we listed there. The majority of those items have since been completed. So what remains now is really just getting our final legal updates, which we have to get to within 5 days of the council approval of the financial statements, as well as finishing up the manager partner review on a few of those last remaining items, as well as obtaining the assigned management representation letter, completing our discussions with the committee here today, and obtaining evidence of council's approval of the financial statements. So once all of those items have been completed, we anticipate being able to issue an unqualified or an unmodified audit opinion on the consolidated 2019 financial statements. As always, if there is anything significant that arises from the completion of these procedures, we would communicate that with this committee as well. On page 2 of the executive summary, I just want to highlight that we are independent of the city and its related entities and will remain so. And we've documented that further in the independence letter that we provided in the appendix to the report. Deanna's going to go into a bit more detail on a few of the other items here. The only other thing I want to mention with respect to COVID-19 and the impact of the audit, obviously there are some additional considerations that had to be made, given that this was a pretty significant subsequent event to the 2019 financial statement. So you will see that there is reference made to it in the financial statements themselves as a subsequent event note, which is note 25 to the financial statements. And I'll hand it to Deanna to go through some of the details of the audit risks and results.
Perfect. Thanks very much, Katie. So if we move on to page 3 of the report, the next few slides just discuss significant risks that we've addressed as part of our audit. So although the next few pages do summarize some of the procedures that we've performed as part of our audit, they by no means represent all of the procedures that we performed, but just some areas that we wanted to highlight and bring to your attention. So the first significant risk that we've addressed relates to completeness of accruals, specifically related to the landfill liabilities, legal accruals, and contaminated sites, just due to the level of assumptions that are required to develop these amounts. So we've performed the procedures that are outlined in the planning report and identified a few prior period misstatements to bring to your attention, which we'll provide a little bit more detail on as we go through the report. The next item on page 4 is a significant risk related to the fraud risk from management override of controls. And this is a presumed risk that's present in every audit that we perform, so no specific risk related to the city, but our audit methodology does include procedures to address this risk, such as retrospective review of estimates, our journal entry testing, and review of significant unusual transactions. And we don't have any issues to report back to you with. Moving on to page 5, the next few slides go through our work over significant estimates within the financial statements. Again, these estimates are subject to management judgment and subjectivity, and therefore we perform a significant amount of audit work here. So the first item relates to the landfill closure and post-closure liability, which at year end was approximately $41 million. We determined that the management's assumptions to determine the liability and their procedures to calculate the liability are appropriate, and we don't have any issues to report to you here. As at today's date, we have completed all of our procedures as well. I know that there is a mention to some outstanding items there, but those are all done. On page 6, we note our procedures that were performed related to accounts payable and accrued liabilities, and we believe that management's process for identifying significant accounting estimates related to these is appropriate. The next page here goes into other areas of focus. So the first one being capital projects and acquisitions. So the city is continuously spending on capital projects, and it represents a significant dollar value balance on the financial statements. So we've summarized here the procedures that we have performed. We did identify one misstatement that, again, we'll get to a little bit further in the report. And the fallout of that is an uncorrected difference within the statement of operations at year end. Moving on to page 8, we note our audit work performed over payroll and employee future benefits. The liability for post-employment and post-retirement benefits is determined through an actuarial valuation, and we've performed testing to review the significant assumptions within that report. If we move on to the next page, we've noted that there are some items that were brought up as a result of our procedures performed over payroll and employee future benefits. The first one being that we've identified a projected uncorrected misstatement related to the estimated Wsib accrual at year end. And again, a little more detail on that is provided later on in the report. During our testing performed in a prior year, we did identify differences which are, a control observation, which is also included in the report. And as part of our testing, there was also a difference identified with respect to a liability that existed at year end. And the fallout of that is, again, an uncorrected difference that we'll go through in the report. The next item on page 10 relates to taxation user charges and transfer payment revenue. So we've summarized in our planning report the procedures that we plan to perform here. This is a significant balance due to the dollar value of $1.2 billion, and we don't have any issues to report to the committee there. Page 11 goes into a few other areas of focus, which again were brought up as part of our audit planning report. And we just wanted to report back to you here that we don't have any significant issues that were identified. We have performed an audit over the new BIA with Hamilton Road BIA. And we note that the caseware implementation for the preparation of the statements will be deferred until next year. On page 10, we just want to bring to your attention that we have used data and analytics as part of our audit in order to increase the effectiveness of our audit procedures. We note here the routines that we have used. We make use of a shared collaboration site to enhance the effectiveness of our transfer of information between teams. And then we've used computer-assisted audit techniques to assist with our performance of testing over journal entries, as well as various routines related to tangible capital assets. On page 13, we did just want to bring to your attention that there is a difference on this page related to the adoption dates related to upcoming standard changes. In response to COVID-19, there has been a one-year deferral with respect to the implementation of the upcoming standards. So you'll notice that these dates have been updated to reflect that change.
So moving on to pages 14 and 15, the uncorrected differences. So we have noted here a couple of items that remain uncorrected in the financial statements. So these in aggregate are not material to the financial statements. And they mainly, two of the three of them really relate to the fact that there were a couple of prior period items that got corrected through the current period, which effectively makes the statement of financial position correct going forward. And it just has a one-year impact on the current statement of operations. So we've outlined those there for you. Moving on to slides 16 and 17, we did not note any significant control deficiencies that we wanted to bring to the committee's attention. We do want to follow up on a couple of observations though. The first one on page 17 with respect to payroll agency 3, you may recall if you were on this committee last year, that was one of our findings last year. So just to bring an update back to the committee, we did not find any issues in our testing over this year. However, we know that management is still in the process of recommending the steps to remediate the deficiency that was noted. So we just wanted to bring that to your attention. And the other item is just a recommendation to ensure consistency among accounting policies, specifically with respect to when WIP is being transferred for road surfaces in different scenarios. So we noticed a bit of a difference in treatment there that we are just suggesting be looked at.
Mr. Chair?
Oh, sorry.
Councillor Van Holst, do you have a point of order?
No, a question, Mr. Chair. We're invited to ask questions along the way.
Yeah, what I'm going to do is have questions at the end. I think we're nearing the end of the presentation. Is it so urgent that you have to ask it right now?
No, it's just a question about the item being discussed, but I'm happy to wait to the end too.
Okay, I did see your hand and I'm going to come to you. Yep, go ahead.
Okay, thank you. So page 18 is just really some resources for the audit committee. A couple of items we thought might be of interest to you included in the links there around audit committee focus areas and agenda items, as well as digital disruption. I'm not going to expand on that any further. And then if we move into the appendices, in Appendix 1, it outlines what our required communications are to you. So you'll see there where to find our auditor's report, the management representation letter that we will have management sign once the financial statements are approved, as well as our annual independence letter. And the only other item in the appendices that I wanted to highlight for you is Appendix 3. This is a document that we provided to management back in April, just to outline some of the audit considerations with respect to COVID-19. Because we're dealing with a December year end, largely these are considered subsequent events that did not exist at the time of the financial statements. So many of these considerations will be for the fiscal 2020 year end. But there are definitely some items. There's quite a lengthy checklist that we had management go through just to help us identify any additional risk areas or any matters that should be disclosed in the financial statements with respect to COVID-19. So we provided that, this document here really for the committee's information, and there's also a link there to some COVID-19 resources for you. And that really wraps up our audit findings report, so happy to take any questions.
Thank you very much for the presentation. I'm going to go to Councillor Van Holst, and if other members of the committee have questions or guests, I see we have Councillor Hillier here, just raise your hand in the Zoom. So Councillor Van Holst, and then I'm going to come to Councillor Turner. Go ahead.
Thank you very much, Mr. Chair, and also thank you to our auditors for the work and for what they were able to uncover there. My question through you, Mr. Chair, to our staff is just how they might suggest resolving the issue regarding the asphalt that was described on page 17. The suggestion is that we make this consistent, and I wonder if we had any thoughts about that yet.
Let's go to Ms. Barbone.
Actually, I'm going to defer to Mr. Collins. He's ready to go on that question.
Mr. Collins.
Through the chair to Councillor Van Holst, when the city came up with our tangible capital asset process, a sophisticated system was developed to recognize the tangible capital assets and the progress that they make through the work in progress process. Given that in this scenario, the work is done, some projects are done by internal city staff, along with other works being done by outside city staff. At the point in time in 2009, we chose to recognize the work that was done by outside contractors at the time of substantial completion, which is where the roadway would be usable by the community. Whereas for our internal projects, we decided to wait until that final coat of asphalt was put on, which is typically a year after substantial completion. To remedy the observation put forward by KPMG, we're working on right now adjusting the system to recognize both the road works consistently, be it at substantial completion. And later on in this discussion, I will be advising Audit Committee of another step we've taken to ensure that we start recognizing assets or liabilities based on their substantial completion. Thank you.
Councillor Van Holst.
That was great. Thank you very much. I'll turn it over to my colleagues now.
Councillor Turner.
Thank you, Mr. Chair. Just a couple of really quick questions. This is all reassuring and very helpful for us as a committee. My questions turn to pages 8 and 15, specifically with respect to the liabilities on vacation and sick leave liability. I think more so with vacation. And this would really surround, I think, primarily hourly waged employees. If that's is there a risk of an unfunded liability occurring there if the vacation was not taken in the year that it was accrued and could be postponed several years? So their wage difference might change in those years. Maybe they're making $20 an hour right now. They don't take the vacation now, and they have 40 hours of vacation that they carry over into the next year, and now they're making $22 an hour. So now they're making $2 an hour more over 40 hours of that vacation is an extra $80 of an unfunded liability because we posted for it in the current year, but then it gets carried over to the next year. That's not so much an issue in 1 year, but where it continues year on year, and that accrues because the real dollars that it was posted in was years ago, and I think that becomes more so the case in sick leave. How do we account for that? And I'd imagine, looking at the numbers in general on the carryover amount, it's probably not material, but it's something that's always flagged for me.
So I think I'll go to the auditors first, and then maybe management wants to weigh in.
Sure. Yeah. So that's a great question, and you're correct that the liability does get accrued as it's earned. So there's not necessarily a means of knowing at this point in time what potential wage increases or position changes might be. But I would say that the entirety of the liability is below. Both liabilities are below our materiality levels. So I would think from an audit perspective, it would be difficult to get to an accrual that would be material in nature for that difference, because it would have to be quite a significant number of employees with quite a significant amount of vacation and wage changes. So, so from an audit perspective, I don't think that there's a risk of material misstatement there, but I will ask management if they'd like to comment on if they see that as being a significant issue potentially.
Mr. Collins or Ms. Barbone?
Through the chair to Councillor Turner, the organization does have policies in place to reduce the growth or mitigate the growth in vacation liability. However, there are times where vacation is carried over. At those times, at the end of the year, a process is done to calculate what that accrual is by employee, to update that accrual, and we build upon the previous year's accrual in the event that the employee has not taken that vacation. Thank you.
Councillor Turner.
Thanks. Yeah, thank you, Mr. Chair, and thank you both. So to question to page 15, just with respect to the uncorrected differences, I'm just trying to understand the math on the annual surplus effect column. It shows the total differences of 6.5 million, but the financial position difference is only 2.157, which really only correlates to the projected uncorrected overstatement of WSIB accruals. Why do the other two not impact the financial position?
Ms. Denbach.
Again, through you, Mr. Chair, again, a great question. It is one of those rare times in the accounting world where it's almost a one-sided journal entry when you have an instance where you're correcting something out of period. So because those annual surplus effects really belonged in prior years, the opposite side of the entry would be to your accumulated surplus on the statement of financial position. However, that statement of financial position is already correct because you've corrected it through the current year, if that makes sense. So, so it's really sort of a one-sided entry just to correct that statement of financial position for the current year, and then it pushes it through the statement of operations, if that makes sense. So it is intentional. I know it does look odd because you're used to seeing numbers that balance.
It's the year of accounting that I didn't take. I stopped too early. So thank you very much.
You're welcome.
Any other committee members have any questions or comments about the audit findings report? If not, perhaps we have a motion from committee members to receive the audit findings report. Yeah, Councillor Turner, seconded by Councillor Van Holst. One last time, any further discussion? If not, I just wanted to say thank you very much for the work. I know this year has been unusual because of the pandemic, and things were delayed a little bit because of that, but the important thing with auditing is to do it properly and not necessarily to do it fast. And I'm glad that we've got to this result here in September. I really appreciate the work, both of the auditors and management, to work through that during a time that was very difficult, and frankly, staff resources were very constrained. So I really appreciate that. We'll open up for voting. That's going to be on the screen. I'm going to go two people in order, I guess. So we'll go Councillor Van Holst.
Yes.
Councillor Morgan,
Yes.
Councillor Turner,
Yes.
and I'm in favor. That motion carries. So as you sharp-eyed people have noticed, we went a bit out of order. So we're going to be returning to 4.1A, which is the 2019 financial report, which is the large portion of our package. I'm going to start by turning it over to Ms. Barbone to give a bit of a context, and then we're going to go to Mr. Collins for a presentation. Then we're going to open it up for questions and discussion among committee members. Ms. Barbone.
Thank you. Through the chair, this is a huge feat in terms of workload that the finance area has diligently worked, very unusually through the summer, to actually bring the financial statements. And I think, first of all, I have to have a huge note of appreciation and thank you to all of the finance staff that worked so hard to bring this forward. And most notably, Ms. Sharon Swans and Mr. Ian Collins, who really helped to guide the majority of the work, and the staff. And I know there were service areas that contributed. And a huge note of thanks as well to KPMG and all of the external audit team that worked diligently as well through the summer and under very, very unusual circumstances that we're not used to. So we are very, very pleased that we finally have financial statements and we're able to bring those forward to you today. And Mr. Collins has a presentation that he's just going to walk you through the key highlights of what the documents show in terms of our financial position at December 31st, 2019, and some of the income statement that shows the activity that took place in all of our service areas. So with that, I'll pass that over to Mr. Collins.
Mr. Collins.
Thank you, Committee Chair. Just to kind of provide some context to the 500-page document that is before Audit Committee, and to highlight some of the most notable changes that you no doubt will come across in weeding through this document, I would just like to take some time to walk through some of those items. So I'm going to go by the Audit Committee agenda that was circulated, and I'll be referencing the page numbers that are on that hard copy. So the first page that I would like to start off with is the composition of your financial consolidated report. And as in typical years, it's broken down into 4 key areas. One being highlights of our key financial policies, followed by our 2019 financial results, including trends, followed by a 5-year review and general statistics. And then we get into the bread and butter, which is the consolidated financial statements. The reason why we provide this is through the Municipal Act 2001, Section 294(1) requires that a municipality shall prepare an annual financial statements in accordance with generally accepted accounting principles. The next slide is going to really speak to the highlights and changes that you will no doubt see or have observed in those financial statements. The one major one was our consolidated entities. Typically, the city has 20 consolidated entities within our consolidated financial statements. New for 2019, we have a new entity that joined us, which is the Hamilton Road Business Improvement Association. That has now been included in the consolidated financial statements. And you will note that as this is being their first year, that financial statement is for 15 months. With that being said, last year was the last year that the city reported on the Public Utilities Commission as we wound it down in 2018. So we gained one entity to report on and we lost one in 2019. Further to KPMG's audit finding report, you will note in note 25 of the financial statements, there's been identified a subsequent event, which is COVID-19. And in that event, it just gave a precursor of what we could look to expect for in 2020. And the appendix that KPMG has provided provides that auditing lens that we need to pay attention to in 2020 in preparation for our 2020 financial statements. Another interesting change and highlight for committee would be the new note 11, which refers to the city services payable. Back in 2018, when council approved the 2019 development charge background study, council chose to wind down the urban works payable and include it within the city services reserve fund. As a result, we've created a city services payable liability. In that liability, we're recognizing those liabilities that were owed coming through urban works. Also, we've also identified the liabilities that we have for city services works too. As mentioned earlier to Councillor Van Holst when we were speaking about the recognition of work in progress road assets, we have determined with the auditors that we will book that liability based on the receipt of a certificate of substantial completion, which is signed off by a city engineer or an engineer acting on behalf of the city. This recognizes the liability sooner than how we were previously recognizing liabilities, because at the time of the Urban Works Reserve Fund, we were recognizing the liability when the developer issued us a claim to get reimbursed for the expenditures that they've occurred. In going through this transition, we identified that we had a swim pond on our books that the developer had not claimed for as of yet. So we had to make a prior period correction, which is what KPMG had flagged to you a couple of minutes ago. A second development that occurred in 2019 was with respect to the WSIB liability. In prior years, the city depended on a year-end statement that the WSIB provided the city on future cost estimates going forward. This year, upon receipt of that statement, we identified that absent from that report was a provision for presumptive cancers. Upon notification that WSIB was no longer providing that information, in conjunction with our colleagues in human resources, we worked with an actuary in July to identify what that presumptive cancer future cost could be and booked it in accordance with past practice. The one observation that was made by KPMG was the discount rate that Oliver Wyman used was inconsistent with the overall corporate discount rate. The change in discount rate was 3.25% that the city typically uses, whereas Oliver Wyman chose a discount rate of 2%. That led to a correction, as pointed out by KPMG. Finally, we had an unusual transaction that occurred in December of 2019. In late fall, the city was advised through its benefit providers that in 2018 and in 2019, there was a deficit in one of its benefit programs. As a result of that deficit, the city went and remedied it by paying it out, leveraging some surplus balances that we had with our other benefit providers. This led to a correction, though, for 2018. To prevent this unusual transaction from happening again, we're going to increase our joint monitoring of these benefit accounts along with our counterpart and look at establishing of thresholds within our funds that we hold with them. This, we anticipate, will no doubt reduce the likelihood of an unlikely transaction occurring again. And this will also require working with our benefit providers to provide more timely financial statement reporting to us, the city. Moving along, I would like to reiterate on the page that talks about consolidated statement, what our statements comprise of. All the statements that you'll see within that binder consist of four predominant statements. The statement of financial position, which is typically referred to as the balance sheet for some of the private organizations out there. The statement of operations, typically you'll hear of it referred to as your income statement. The statement of changes in net financial assets, which in essence is referred to sometimes as the statement of changes in net debt. and your statement of cash flows. Building on the statement of financial position or balance sheet, I would just like to reiterate what that comprises of. That breaks down the city's financial assets, which includes its cash, accounts receivables, investments, offset by its financial liabilities, its accounts payables, its deferred revenue, long-term debt, employee benefits, and landfill post-closure. And that gets you to a calculation which is your net financial assets. From there, we take into consideration our non-financial assets, which is predominantly the city's investment in its infrastructure or its tangible capital assets, buildings, vehicles, infrastructure. That is reflective of the net book value. Once you take into consideration all those, adding your financial assets, subtracting your financial liabilities, and then adding your non-financial assets, you end up with your accumulated surplus. 90% of that accumulated surplus relates to the city's investment in its infrastructure. Earlier this week, Council would have received an update to the Corporate Asset Management Plan review. In that Corporate Asset Management Plan, it identified that the replacement value of its assets are in the tune of $21 billion. Highlighting, moving to the next page in the agenda, which kind of highlights the changes that we realized over 2018 in our balance sheet, we will note that our financial assets increased over 2018 by $185 million, predominantly to our increased focus on investing, which is consistent with our investment policy. Further, our liabilities increased by $64 million due to deferred development charges and deferred revenue related to federal and provincial gas tax. In 2019, we took a receipt of one-time money for federal gas tax, in which case we haven't had the opportunity to spend at the year end of 2019. In total, though, our net financial assets increased by $121 million. With respect to our non-financial assets, those too increased by $101 million, noting that 30% of that increase can be attributable to developer contributions, falling out to a net surplus of $222 million over 2018. Seeing how our non-financial assets is a big component of our financial statements, I would just like to bring to Audit Committee's attention what were some of our notable assets that were recognized in 2019. We had the Western and Warncliffe Road upgrade recognized in 2019, noting that this was a joint project with Sea and Bridge. Follow that, we had the second phase completion of the Dundas Flex Street. Last year at this time, we identified that we recognized the Dundas Flex Street Phase 1. Following that, we had work done at the Main Street and Longwoods Road upgrade in Lambeth, $10.3 million. Our West London Dykes upgrades, Phase 5 and 6, was completed at $4.3 million. And then we had some forced main and sanitary pipes at Colonel Talbot Pumping Station done for $9.4 million. The big item, of course, was the developer contributions to our tangible capital assets, which totaled $64.9 million. Once again, to reiterate, what comprises our non-financial assets are the net book value assets of our infrastructure. As of December 31st, 2019, our net book value is $3.99 billion. Predominantly, as you would naturally suppose, that is tied up in road infrastructure, wastewater infrastructure, and water infrastructure. Shifting to the statement of operations, our income statement, we would just like to reiterate to Audit Committee that our financial statements are based on a full accrual accounting basis in accordance with the public sector accounting standards. And you should note that as part of the multi-year budget, we present on a modified cash basis. Key items that that differ from our budget process is that through our financial statements, we take into consideration amortization. We consider that as an expense. However, debt principal repayments, we do not expense. Contributions to capital and reserve funds are also not expense. Revenue recognition for tangible capital assets is undertaken as part of our financial statements, as well as we consolidate on our boards and commissions based on the gross, not the net. A slide familiar to audit committee, but is still very poignant today, is comparing our 2019 city budget to the PSAB budget. And in those next two slides, you can see what the differences are, i.e. recognition of the capital funding earned, developer contributions, reserve fund deferred revenue earned, adjustments due to government business enterprises, as well as taking into consideration boards and commission surpluses. Those items are not taken into consideration as part of our budget document. With respect to operating expenses, which is on the following page, you'll note that we have capital expenses that are not capitalized. We expense amortization on the financial statements. We also recognize loss on disposal of capital assets, as well as we expense the landfill contaminated sites and employee benefits liability. Offsetting that, though, we do not expense debt principal repayments, transfer to reserve funds, or our capital expenditures, i.e. pay-as-you-go financing or capital levy that you are no doubt familiar with as part of the budget process. An interesting slide is on the statement of operation expenses, just to see where we've had some increases in expenditures over 2018. Our transportation services had a $14.9 million increase over the prior years related to roads and transportation. Social housing had an $8.1 million increase predominantly for affordable housing. It was a 15% increase over what was spent in 2018. Protection for persons and property, which are your police and fire, had a $10.3 million increase. Planning and development had a $5.6 million increase in expenditure, predominantly related to the cost of goods sold for industrial land, as well as noting the correction for the swim pond that was identified earlier to you by KPMG for $1.6 million. General government had an increase of $6.7 million, attributable to an increase in benefit payments and legal accruals. That $6.7 million includes that deficit payment that we made to our benefit provider that I referred to earlier in the presentation. And finally, $3.4 million comprised of the remaining functions on expenses. With respect to revenues, overall, our revenues decreased $1.1 million in comparison to 2018. We did have increases in tax revenue and user fee charges of $35.1 million, as well as we increased over 2018 for revenues for sales of industrial land, investment income, and municipal accommodation tax. However, we did note that there were decreases in transfers recognized from development charges, recognition of other level of government grants, as well as a decrease in our developer contributions of tangible capital assets. One last very numeric slide that is good for audit committee to be aware of is our reconciliation of our budget presentation down to our financial statement presentation of our surplus, where we look at what was reported back to corporate services and council back in May, where we identified that the property tax supported budget had a $3.2 million surplus, the water rate supported budget had a $1.7 million surplus, and the wastewater and treatment budget had a $3.3 million surplus. That brought us to a total operating budget surplus in 2019 of $8.2 million, consistent with council policy and direction. We contributed that surplus to reserves and reserve funds to get us to the $222.2 million surplus that you see before you in your financial statements. We look at adding back transfers to capital and reserve funds. We take into consideration our debt principal repayments, add capital program funding earned in the year, but we take out capital expenses to get us down to the $222.2 million consolidated surplus per financial statements. Finally, as we've acknowledged in the past, the standards that govern the reporting of financial statements are changing. There are some significant changes happening over the next coming years, mainly being the asset retirement obligation, financial instruments, foreign currency translation, revenue, and financial statement presentation. We see that our public sector accounting standards continue to develop, improving transparency, recognition, and disclosure. Due to COVID-19, the implementation of these standards were pushed back 1 year. And with that, I turn it over to committee for any questions or concerns or clarifications. Thank you.
Thank you very much, Mr. Collins, for concise but also comprehensive overview of the very large report that's in front of us. Colleagues, I know that there's a lot here in the financial statement, so I hope that we can be clear about what it is we're referring to when we're asking questions. So if you've got a page number handy, that's going to be helpful for everyone. Just a request from me. Just raise your hand on the Zoom if you'd like to weigh in with questions or comments about the financial report that is in front of us for 2019. Councillor Van Holst.
Thank you, Mr. Chair. And through you, looking at the slide deck, page 15, I just wondered if we could have a comment. It seems that on the previous page, well, 14 and 15, we've got our expenses increased by 49.1 million and our revenues decreased 1.1 million, and yet we still have a balanced budget. So I wonder if we could have a comment just on how that seeming contradiction is resolved.
Mr. Collins.
Through the chair to Councillor Van Holst. I apologize for how I described the slide. The change is in essence relation to compare.
Mr. Collins, you just cut out there, so you're going to have to restart.
While we're waiting for Mr. Collins, perhaps it's Ms. Bourbon that I can complete that sentence while he's maybe trying to refocus.
Great teamwork. Go for it.
So it's specifically in how we're showing the significant variances over the prior year, not in totality. So it's just showing how the 2019 year compares to the previous year, in that we are seeing a little bit of a greater revenue in comparison to greater expenses over 2018 than what we saw previously, but that our expenses are down. So we still have a surplus overall, but when you note at the bottom, you can see that our surplus is slightly reduced over what we reported in 2018, albeit quite significant at that. So hopefully that answers the councillor's question.
Okay, thank you. Just seemed worthy of comment. Thanks again for the work that's been done. Is a tremendous amount. I appreciate the opening sections of the report. I thought they were very well written. And as I look through the financial statements, I'll often pick out things that seem to be largely different from one year to the other. And so perhaps on the consolidated statement of financial position on page 51 of the big binder, it says our investments increased substantially there, and that was mostly because of note 4 says it was a leap in corporate fixed income. So maybe I could just have you comment on that increase between 2018 and 2019.
I don't see Mr. Collins here, so I'll go, oh, there he is. Mr. Collins, can you weigh in? Did you hear that question?
Yes, sorry about that earlier technical malfunction. Basically, the increase had to do with how our investment strategy. So in previous years, we kept a very short position in our investments that were less than a year, which would have not been categorized in this category, but we are starting to spread out our investments to pick up a yield. So as we move into midterm and long-term, consistent with the ratios that have been set out through our investment policy, you're starting to see a shift of our investments into mid to longer term investments, which saw the increase in those bigger investment instruments. Thank you.
Councillor Van Holst?
Yes, thank you, Mr. Chair. I appreciate the answer. On page 54, it looked like we had quite a change in deferred revenue. And I might have another question about page 54, but regarding the deferred revenue, there wasn't a reference to a particular note there. It might be in, but I don't know what the 2017 value was. I didn't look back to see, but perhaps a comment on that item from our staff through you, Mr. Chair.
Mr. Collins?
Deferred revenue is when we take in funding from the Fed or from other levels of government where we haven't spent it as of yet due to revenue recognition. We only recognize when we realize those costs. Also, as part of our deferred revenue, we take into consideration our development charges collected. Once again, we only recognize that when we incur the expenditure. In 2019, our building permit revenue, which pulls in our development charges, that's collected at the same time. You will recall that 2019 was a very robust year. It exceeded our 2018 building permits. So we had more development charge revenue taken in, and since we have not incurred those expenditures, we can't recognize it until we incur those expenditures. So at the end of 2019, our deferred revenue account balance is higher than it was in 2018.
Councillor Reynolds?
Okay, thank you. Perhaps one more question before I turn it over to our staff. The boards and commissions surplus, I wonder, does that include the London Hydro dividend? And sorry, that's on page 11 of of your slide deck.
Mr. Collins?
Through the chair to the committee, that takes into consideration the changes in our investment position with our government business enterprises, such as London Hydro. So it's our proportionate share of their surplus.
Mr. Collins, I think Councillor Van Holst's question is there surplus after they've paid the dividend to the City of London?
I'll have to get back to you on that one. Thank you.
Okay, any other questions from committee members or comments? And then we can perhaps come back to Mr. Collins on that. Nothing from Councillor Turner. I don't see anything from Councillor Morgan. No hand raised there. Does anyone else want to weigh in on this question about the dividend and how it relates to the surplus from London Hydro?
Thank you through the chair, Ms. Barbone. I can answer that question.
Go ahead.
So essentially, if Hydro declares any dividends, that is recorded as a payable on their books and is taken out of their net assets at the end of the day, essentially. So this is the net investment that does not include that would show on that. And the dividends, as they are paid, they become revenue in the City of London and would show as a revenue as part of our income statement. So that what you see here is truly the net investment at the end of the day in the London Hydro, based on the public accounting standards, and then the revenue is recorded as it is earned and paid to the City of London on the income statement.
Councillor Van Holst.
Thank you, Mr. Chair. Happy to remove receipt of this item. I don't have any further questions right now.
Okay, thank you very much. I'll just look to see if there's a seconder to recommend the financial statements for approval. I think that's what the motion actually is. These are the draft financial statements. I see Councillor Morgan. Are you seconding, or do you want to weigh in?
No, I'll second.
Okay. Any further discussion on the financial statements? Okay, if not, I'm just going to say one thing from the chair, which is there's a section in this report that talks about the net debt per household and the net reserves, discretionary reserves and reserve funds per household. And you can see that both of those things over the last few years, in fact, for quite a number of years, have been going in opposite directions, and both in a positive way. So the net debt per household has been declining, and the net discretionary reserves and reserve fund has been increasing. And it's not a small amount, it's quite a significant amount. So we're down about 17% net debt per household over a few years, which is quite a lot. And I wanted to point that out. Second, the reserves and the reserve funds are up something in the neighborhood of 42% in the same period. So you can imagine the actual difference there, like the sort of, if you subtract the debt away from the reserves and the reserve funds, it's not, I don't think that's maybe the most appropriate comparison, but those are two things that are in front of us. You know, it's like 230% growth in the net difference. So that's very strong financial position, and frankly, something we have had in London for a long time when we're thinking about the long-term financial position of the city. I know that we've had many comments at the Audit Committee about this. It's kind of an annual thing. I just wanted to recognize that this year, as we're going through the 2019 financial statements, it's that kind of financial strength and discipline that has helped us be in a good position as we got hammered by the pandemic. And I wanted to recognize the finance staff in particular for helping to guide us to this point, and also, you know, many councils who have followed the same kind of fiscal discipline and looking after the longer term interests, and not necessarily always just the short-term things that are, of course, top of mind for people, but maybe a bit more exciting, but not as important as the longer-term pieces. So thanks very much to the finance staff for that. I'm just going to look to committee to see if there's anything else anyone wants to say. I see Councillor Van Holst. Go ahead.
Thank you, Mr. Chair. And one question through you regarding our boards and commissions. I didn't see anything that was truly alarming here. That would probably come up in 2020. But just I would like to ask our staff if they saw in our boards and commissions any concerns that from the 2019 finances that may be exacerbated by the pandemic this year.
Ms. Barbone or Mr. Collins?
Yes. Thank you. Through the chair, I'll take this one. So certainly for the most part, we have no concerns with any of the financial statements. I think they very fairly represent the organizations. There is one board and commission that I believe there will be some further discussion upon that has been hardest hit by this pandemic in terms of their business ceasing entirely, which is more of a 2020 issue, but which is RBC Place. So certainly that will be reflected in the committee report that will be going to SPPC with our update to financial projections to the end of this year. And we've worked with their board, and they will be looking at some further work to support them in that regard. But that would be the only thing, and certainly, a huge impact that this year has had to date, because their businesses had to cease entirely.
Thank you very much.
Okay, that motion has been moved and seconded. We're going to move to voting. Start with Councillor Van Holst.
Yes.
Councillor Morgan.
Yes.
Councillor Turner.
Yes.
And I'm in favor. That motion carries 4-0. Thanks very much, colleagues. I know that the Audit Committee deals with many matters, but this is one that is quite substantial, and I appreciate your work, particularly when working through the financial statements. That brings us to the first report from Deloitte, which is the Service London assessment. And I want to turn it over to the internal auditors for their comments. Go ahead.
Okay, perfect. So I'd like to draw everyone's attention to page 547. That's where the executive summary begins for the Service London report. So for Service London, this is a department that leads corporate initiatives, which is very focused on customer experience, and they recently assumed a contact center in September of 2019. So the purpose of the internal audit review was to evaluate the control framework and assessment criteria required for this type of service and benchmark it against the Deloitte's contact center strategy and operational assessment framework to be able to provide insights and future recommendations that the city can consider as they continue to develop the contact center. So the key with this review to keep in mind is that it was more of an advisory type of internal audit in terms of providing recommendations for the city to consider to implement at a future date, as opposed to a compliance type review. So in terms of the strengths, there were 3 key aspects that we had identified. The first being the dedicated manager. So Service London recently hired a dedicated manager for the contact center, and that very much helped the improvement of the overall culture and morale as that department transitioned into Service London. We also found that technology being used within Service London's contact center was very much aligned with what we would see from a leading practice perspective. So in terms of capturing the caller data, reporting performance metrics, it all aligned with industry best practices. What was also important to note is that the department is very focused on continuous improvement. There was a positive attitude and ambition throughout this department to be able to move forward and make changes to really look to the contact center as becoming a center of excellence. So in terms of the findings, there were 3 low priority observations. And the first was focused on formalizing performance metrics. So there are performance metrics that the department has in place, but what we were looking for as an area of improvement was just to formalize and establish these and ensure that they were being shared with the contact center on a more regular scheduled basis. The other observation focused on formalizing a schedule for review of the knowledge-based articles. So here again, there was a review of the knowledge-based articles taking place. What we'd like to see is more of a scheduled frequency around the articles as opposed to it being an ad hoc exercise. The third observation, again, low priority, was around a talent management strategy. So here it was just more focused on formalizing a career planning and training requirements and strategy for that particular department. Once employees have been onboarded, so they can have an expectation of what it is that's required of them and ensure that they have their necessary time. The other 3 observations were more leading practice. So here are things for the city to consider on a go-forward basis. So the first leading practice was 3.01, which was looking at an online knowledge base. So the online knowledge base here is that there are several inquiries and calls that pertain to very commonly asked questions in terms of the call center. So here the recommendation was going forward, the city could consider an FAQ page of a self-service knowledge base that customers can refer to and look to content around a number of their inquiries, as opposed to necessarily calling the call center. The other observation was looking at an end of interaction customer satisfaction survey. So here it would just be that once the call's concluded, typically there's usually a question asked if a survey would like to be completed. We were recommending that the city can consider looking into that option as well. And then finally, the final observation was the voice of the customer. So sometimes what we find is that you can get valuable insights and based on the customer's voice recognition, their behavior, their satisfaction in that conversation with the PSR. So here it was just recommending that it was something that the city could look into on a future basis. So I'll pause at this time and just take any questions in regards to the report.
Just look to committee members to see if there's any questions about the observations that the internal auditors have made and just covered in their presentation. Okay, do I have a mover to receive the report? Moved by Councillor Van Holst, seconder. Just need to raise your hand on the screen if I can't see you. Okay, seconded by Councillor Morgan. One last call, let's see if there's any questions or comments. Councillor Van Holst, is that a question or comment or just moving?
I was just moving, but if I can just joke a bit with our auditors, I appreciated the recommendation for appropriate KPIs. I think counting the number of times people seem to have coordinated their outfits or how much chocolate the department eats aren't the best ones for helping out council make decisions.
I was just waiting for the laughs on that one. Sorry, Councillor Van Holst.
I guess that didn't happen. So happy to move. Happy to move.
Okay, we're going to move to the voting. Starting with Councillor Van Holst.
Yes.
Councillor Morgan.
Yes.
Councillor Turner. Okay, it looks like Councillor Turner had to leave. I'm in favor, so that motion carries 3-0. Seconded by Councillor Morgan. Okay, that brings us to the internal audit summary update. Thank you very much to the staff who are working through the Service London assessment. I know you're on the call here to answer any questions that the committee might have had, and I know it's quite an undertaking to go through these internal audits, so thanks very much for doing that while you're dealing with all the other things going on in the pandemic. In terms of the internal audit summary report, I'm going to turn it over to the internal auditors for their presentation, and then to go over in particular the adjustments that are being made to the internal audit plan recommended. Go ahead.
Okay, perfect. Yes, so there are two items that we'd like to discuss today. The first being the revision to the internal audit plan, and then the second looking at the audit observation status summary and to provide you some insights in terms of the closures. So if I could first draw your attention to the updates to the internal audit plan. So in the package, starting on page 561, there is the revised plan. So based on the last committee meeting and the request of audit committee, we did spend some time with the senior leadership team to revisit the internal audit plan and taking into consideration the changing environment and the impacts that COVID has created. So what we presented to you today is more of an agile internal audit plan. So I just wanted to note that what we see many organizations moving towards, and we also see it quite a bit within the public sector, is that organizations are looking to create the agile plan that they're going to revisit on a quarterly basis. So considering the uncertainty and the risks that are present, it makes sense that each quarter you revisit the project. So in this case, what you'll see within the plan is we've structured 3 particular projects between September to December. The first being an assumption and security assessment review. The second being a class replacement project. So here looking at the reconciliation process that's taking place, considering the post-implementation of Perfect Mind. And we'd also like to spend some time looking at police services, their time management and scheduling review. What we would do is once these 3 projects are completed, we would then sit down with management again, revisit the plan, look at what the key projects and risks are, and then come back to the audit committee to look to an approval to move forward with additional projects. So I wanted to pause and just see if there were any questions around why maybe possibly those particular projects were in the plan, or if you had concerns around the approach.
Thank you very much. I think it seemed like a good idea. I'll just check in with the committee members to see if they have any questions about that, the revised internal audit plan. Just raise your hand if you do want to weigh in. Okay, I don't see any. Continue.
Okay, so we'd be asking for an approval from the audit committee in terms of these 3 projects moving forward within the September to December timeline for completion.
Yep, we'll get to that when we deal with the rest of the report. We'll have a 2-part motion. Thank you. Go ahead.
Okay, perfect. Okay, so the next portion is starting on page 568. This is our audit observation status summary. So what I wanted to report was that from the last committee meeting, we had spent time with management to be able to get an understanding of what observations have been closed. So during this time period, we were able to close 11 high priority observations and 8 medium priority observations. So the items that have been closed, we've seen and validated documentation in the IT portfolio management and project management assessment. We were able to close observations in the class replacement project review, construction procurement, IT security, electronic fund transfer, the class replacement pre-implementation project, as well as the computerized maintenance management system review. There are currently a total of 2 high priority observations and 6 medium priority observations that have fallen past due over the past few months. And that's just in relation to the changing environment with COVID. So we have spent time with management to be able to review their action plans and what they do have in place to move forward. And we're comfortable with the timelines for completions and the plans that management have for implementation. So the areas that have fallen behind and have had a revision to their timelines have been the parking revenue generation. We have had conversations with homeless prevention, as well as the construction procurement and computerized maintenance management. Wanted to pause and see if there were any questions in regards to the observation summary.
Any questions from committee members about those observations? Okay, I don't see any. Anything else you'd like to add, Ms. Riffadin?
No, that will conclude the presentation piece.
Okay, committee members. So we have a couple of things going on here. One is some adjustments to the audit plan, which I want to say thank you very much to the internal auditors for very clearly marking in the plan and throughout the document, what was being moved and where. I think it makes it easy for the committee members to follow the adjustments. So I'd like to have a 2-part motion. One is to deal with the adjustments to the audit plan, and the second part is to just receive the report with the observations from the projects that have been underway between our last report and now. So is there a mover for that motion? Councillor Van Holst, seconder. Councillor Morgan, any discussion on that motion? Councillor Van Holst?
No, I'll just extend my thanks as well, Mr. Chair.
Okay, thank you. I know the committee, in particular, Ms. Higgs, who was asking about should we be making some adjustments to the plan. Certainly, we appreciate that management made time to work with the internal auditors to look at what needed to be moved around, what adjustments needed to be made. And I think the new projects that have been added make a lot of sense to me. I'm hopeful for the outcome of some of those projects. I did want to ask one question, which is about the adjustment of the timing for the internal audit of the clerk's office. And one of the reasons I'm asking about it is there is another event happening in 2022, which is the municipal election, and that is a particularly busy time for the clerk's office. So when I saw that it was being rescheduled to the election year, I wasn't sure that that was a great timing. And I just want to check with management about that. Mr. Schultes, go ahead.
I did speak with Ms. Ruffadine to identify that, and as I understood it, it was a fluid audit plan, and that would be revisited on a quarterly basis, but I did indicate that 2022 is very significant from a clerk's perspective.
So perhaps we can leave it as it is, and if there's an opportunity to bring it forward a little bit, I would imagine that even the end of 2021 would be a lot more preferable than any time in 2022, or potentially maybe in the aftermath of the election rather than just before. So we have time, certainly between now and then, and generally I appreciate the need to defer it out into the future, and I think that that's appropriate. So I did want to ask about that, colleagues. The motion has been moved and seconded. Any more discussion? Seeing none, we'll open it for voting, starting with Councillor Van Holst.
Yes.
Councillor Morgan.
Yes.
And I'm in favor. The motion passes 3-0. I'm not aware of any deferred matters or additional business. I don't see any. That brings us to adjournment. Would someone like to move adjournment? Councillor Morgan, seconded by Councillor Van Holst. All those in favor? I'm also in favor. I see 2 hands up on the screen. The meeting is adjourned. Thank you very much, committee members, and thank you very much to everyone who is on the meeting.
Thank you.
Thanks very much.